Hey guys, per usual, everything on this channel is for educational purposes only and is not intended as financial advice. So today I want to talk about dollar cost averaging, also known as DCA. What that is investing a fixed dollar amount in a specific time period, either yearly, monthly, weekly, quarterly, whatever it is. A lot of trading firms like people who DCA. They recommend DCA. They recommend it because it increases their fees for each time you are investing. Okay, and versus all at once. So what I did is I looked at dollar cost averaging for crypto. Now, everybody, for the most part, myself included, has really talked about DCA a lot in crypto. You do it in general to shield yourself from volatility. If you look into DCA for stocks, equities, generally a big myth. You make way more just lump sum investing. Let's say if you spread the 10 grand out between the periods versus all at once. Now, obviously, if you are getting paid bi-weekly and you don't have 10 grand, and you buy every week or every 2 weeks, that's another form of DCA, but I'm not comparing that version of DCA to lump sum versus DCA. That's just practical DCA or purposeful DCA is what I'd consider it. So I did some super bare bones raw numbers here. Again, Bitcoin, Litecoin, Ethereum. What I did is I started with 10 grand in 2014 and I divided it yearly, quarterly, and monthly. Each year or quarter, this was the fixed amount. Now that changed for Ethereum because Ethereum hasn't been around that long. And I've kind of separated Ethereum off because it's kind of like comparing apples to oranges. If I was using all the data, coins started at 0, so it's hard to really, if you lump sum as an early adopter, basically a Satoshi, if you compare everything to Satoshi, it looks silly. But I'm just comparing it to 2013, sort of like the phase where most people started to go mainstream, at least with Bitcoin. Definitely took off in December 2013. So I can do that for Litecoin. I can't do that for a lot of altcoins because they just weren't around. So there's definitely a lot more data you can look at. You can also break this down into weekly. You can also do some other data where you're looking at, should I invest in Bitcoin or Litecoin or whatever every other week? Should I invest quarterly Litecoin, quarterly Ethereum, quarterly Bitcoin? However you want to do it. This is just bare bones. So this is the raw data. I pulled this all manually. I'm sure there's an easier way to do it. So if you look at the graphs, these are the totals, raw values, and then percentage of gains from the 10 grand initial, and bounce that against the lump sum investing. So I was kind of surprised because for Bitcoin and Litecoin, lump sum investing was not actually better than dollar cost averaging. But I think what was more enlightening was the fact that the quarterly DCA for Bitcoin was actually better than anything at all. I'll get back to that. But for Litecoin, yearly was definitely better, and Ethereum lump sum was better because basically it was the ICO in 2014-ish. It was at $1. So these are kind of apples and oranges. You can see the gains are bigger in Litecoin percentage-wise based on this. You sort of have to bounce this against whether or not you believed in Litecoin in 2014 or you believed in it each year. So these obviously aren't stocks, but if you devoid any sort of assumption that they're going to die ever, investing in altcoins is better than investing in straight Bitcoin. Now, if you think Bitcoin is going to live and it has the best shot, obviously that's where most people I think are at this point in the crypto space, barring Ethereum people. So the conclusion for this is, yes, lump sum is better if you invest at 0 for some of these altcoins and you hold it and they're around. They have the longevity for 2, 3, 4 years, whatever it is. These Ethereum charts are basically the charts of how Bitcoin would look if you invested as a Satoshi, early adopter type deal. So I think the Bitcoin picture is the most convincing as far as based on the data available for me, because again, it tells me quarterly DCA is actually better than lump sum, nearly as good as yearly, overall better. And I'm sure there's a better way to do this data. I probably messed up the math, so you guys can help me out with that. So back to the quarterly thing real quick. For Bitcoin, I've talked about this a few times, but the quarterly, for some reason, Bitcoin really loves highs and lows on quarterlies. I don't know if that's just related to the futures or not related to the futures. I'll leave that to your own conclusion. But I think that clearly influences the DCA aspect of it. These quarters don't even necessarily match the quarters that I snapshotted with the values. So just something to think about. Let me know what you guys think. Do you DCA? Do you have people asking you about lump sums and what to do? What have you done? Again, none of this is investment advice. This is just educational information. Like, dislike, share, comment, subscribe. Hit me up on Twitter, Telegram, and happy trading.